Hello and welcome, traders. I'm Valentine, your host for today's insightful discussion, brought to you by forexpropfirm.com. In today's episode, we have the privilege of diving into the minds of experienced traders as they share their strategies, insights, and journeys in the world of trading. Whether you're a seasoned trader looking to refine your skills or a newcomer eager to learn, you're in the right place. So grab your notebooks and get ready to take notes because we're about to embark on a fascinating journey into the world of trading excellence right here on forexpropfirm.com. Without further ado, let's dive right in. Let's turn our attention to our esteemed guest for today, Ronak. Ronak is not only a seasoned trader, but also a standout member of the trading community here at forexpropfirm.com. They've been given 25K in capital, which is a lot of money to trade with. And guess what? Ronak has already made $1,600 in profits. Today, Ronak is here to share his secrets with us. Get ready to learn from someone who's really been there and done that. So let's give a warm welcome to Ronak. Ronak, how are you doing?
I'm doing good today. How are you doing today?
I'm fine. Really, really good. Where are you from?
So basically, I'm from India, but I've moved to the UK like 2 years back. And I have been introduced to trading 8 years before when I was back in India doing trading in equity. So it was mainly stocks and long-term investing and swings. But now I had a mentor here by God's grace. So I've been introduced to Forex trading, which I've been trading for like around 6 months. And I can understand the markets because I've also been trading from 8 years. I can understand fundamentals and everything. So it was really easy and good for me to swap towards Forex markets, commodities markets. And it's been fun, honestly. And especially Forex prop firm with a nice amount of, you say, compared to other prop firms, I've got good grooves and good everything. So once I bought a challenge, I knew that I had 10%, that I can lose my equity. I was trading it as my own money. So I would say always trade, even if it's a challenge or anything, trade it as your own money, because that's the key. If you just think that it's just a challenge, it's not your own money, it's someone else's money as well. And it's not even impactful. You're not going to make money out of it. You're going to lose the money 100%. For me, mindset is more important with trading. So I treat trading and mindset together, and trading always humbles everyone. That's just my little bit of overview insight in trading.
Great introduction.
Thank you.
Okay, so could you maybe give us a little brief overview of how you started trading and how your trading journey went?
So I would say, my start was 8 years back when I was not that old. I was just looking at people, what they do, what finance people do. I am a code finance guy. I'm a finance geek, if I can say. So I am like a code finance guy. I got introduced to finance by my dad as well because he was working in this sector and everything. He was never a trader, but I was really, good with money. That's it. So I started investing a little bit of my money because I was doing jobs and everything back in India. So I invested money in stocks and everything. After a couple of years, I saw a 300% return on my money spent. So that was the turning point for me, saying, okay, I can do it. So that's because I was never ready to pivot to any other things. I was just finance. That's the only thing I wanted. So now I can say that after that 300%, I was not even looking at markets, nothing, because I was just too young for it. So I was just normally looking at other things, not in-depth analysis, not technicals, not fundamentals. I knew that something's going to go up in the government policy. So I just bought the stocks. It gave me a 300% return in a year and a half, 2 years. That's when I knew that I can get in core of this. And that's when I started trading. So in India, there's different pairs that you can trade. So mainly it's indexes, Nifty, Sensex, all of that. But I was still not trading that. I was mainly in stocks. But here I can see I've pivoted to Forex markets and it's been really, really good.
Okay, crazy, man. Holy 300% gain in 1.5 years. How great is that?
That is amazing. I wish that I would have put a lot of money in. I had a little bit of money, but still a triple X. So
that's so crazy.
Not bad. It was not a bad decision though.
Yeah, of course. But it's crazy to hear because most of the times when I talk to traders, all of them say they lost money in the beginning. I myself lost money in the beginning, so it is just a little bit normal for me to hear that. But you're coming around the corner and you're telling me you made 300%. It's crazy.
300% on the first stock I bought. That was 300%. The next one was, I think, 80%. Another one was 170%. That was my last one that I bought. That's when I made a lot of money. Then I was like, oh, I've had my share of losses as well. I'm not going to say I've still got my portfolio from India, which has some losses in it. But I would say that was at a later stage. But the first one, if we talk about that, was a nice profit.
Okay. Wow, that's insane. So you started with indexes and with this, how should I say it? So you started in India, right? You started investing money. How old were you when you started investing your money?
You won't believe this, but I was just 18 when I started investing. I opened my own account. I was just 18. Yeah, that's the only thing I wanted, because day one, the only thing I knew, I had to invest money. That's it. I can't go way around it. That was just my mindset of seeing it in a way that you should invest your money. Might it be anything? You can be doing mutual funds or anything you want, bonds, shares, whatever you think your money is safe. But I thought that stocks is a better option for me, because I was not looking for a fixed return. I was looking for a jumping return, like compounding thing. So that's why stock was the best option for me for the amount of money I had. I knew the money market and the Forex market, but I didn't have enough money to put in the money market, because I would lose the money as soon as I put it in, because it has various confluences and everything in it.
Okay, so stocks in the beginning, and after that, how long did it took you to move over to Forex and to really start trading and analyzing the markets?
Yeah, so I would say around 6 months before. I would like to mention my mentor here as well. He introduced me to trading, like Forex, commodities and everything. He told me that you have the capability, because you have already seen markets and everything, you can pivot to Forex market really easily. Just have a look, study. He given me great advice. So mainly I would say for all the new traders, when you start on demo accounts, so you know what's the spread like, what's the leverage like, what's everything like in the market, because you're just new, you don't know anything. And there is no problem in not knowing anything. I was asking all of the stupid questions to my mentor as well, and he thought that I knew everything, but I didn't. So I treated myself as a new guy in the Forex market and trading and analyzing the market every day, back testing. That's the key, I think. I used to back test every night after coming from work, like 4 hours. I would sleep at 3 a.m., wake up 7 a.m., back test. And I used to trade trades on demo accounts. Trust me, I was making losses as well, which my mindset was not trained for, because the thing with me is I would trade any money as my own money. So my mindset was not going great, but then I would move to the next step of reading books. Especially, I would say, read the book Trade Like a Shark. That's one of the best books that you can read for trading, because that will teach you how to treat your trading. The best line I would quote here is basically by the author. He said, trading, always treat it like your business. Business has highs and lows, so trading is going to have it highs and lows. If it's a business, for an example, imagine you're running X or Y company, for example, marketing company or something. I'm not going to talk about finance yet, about marketing company. It's going to have its own highs and own lows. You're going to lose money as well, because you've invested a lot of money in X or Y things, so you're going to lose money there as well. So that's what he said. Treat it as business and you will make money. So I trained my mindset to treat it like a business, and that's when I understood everything, how to analyze, what strategies I want, how am I going to trade. I researched n number of strategies. I've researched many YouTubers, many people who always have videos, they trade on their strategies, many podcasts, how they trade. I wrote it all down in a book and I sorted it out. So when I was back testing, I traded the strategies that I wanted to, that I really like. Okay, this can make me money. So that's when I came cut short to 3 or 4 strategies, which I really like and which I would like to talk as well in the future.
Okay. Yeah, you made such a good point. I didn't read the book you mentioned, but I heard the quote just a little bit different, because you talked about treating trading as a business. And one of my mentors told me that I should treat trading as a business, because if I treat trading like a hobby, I can only expect to get like hobby returns. But if I treat it like a business, I can expect to get good returns, you know? So really, really good quote.
Yeah.
Nice.
And I would like to mention one more thing. Social media. That's the main thing where 95% of the traders try to fail as well. Seeing that they're making 60, 70 grand every trade, it is them because they have trained their mindset for n number of years. We don't even know, like around 10 years they're trading, 15 years they're trading, and then they've reached this level. So when I've put myself in that situation, I would say I need a lot of work in myself as well before I can pivot to a 60 grand trade. That's what I think. I'm not saying just delete all of the social media influencers. Keep them as a confluence where you get motivated from it. But also, you know, working your mindset in a way that I want to work until there, so I can make that much money in my life or in trading, which I want to do, and not quit. Trading is a thing that you don't want to quit. If you lose your faith in trading, trading is going to lose faith in you as well. Yeah, that's what I think.
Such a great point, because I think that the trading industry and social media is a little bit messed up, because all of the new people that come in, they are looking at people making like 100R gains here, and that's the Lambo money, and you know, and I think it puts the wrong expectation on trading. And I had that myself. So I was starting out, and I was like, I told my girlfriend back then, in 2 to 3 years, we are going to be millionaires, and I'm going to make so much money. And that really wasn't it. In the first 3 years, I lost like 5 to 6 figures in trading. You know, it was awful. And the pressure I put myself under was just too much for me. And I think over the years I learned to just keep a little bit of one eye on everything that's going on social media. But definitely you need to don't really let this put too much pressure on yourself, because everyone got his own journey, you know. If you're in chapter 8, I can't do chapter 1, because we are not the same person. So yours different, your story is different than mine, and so you need to focus on yourself. I'm going to focus on myself, and I think that is one thing that new traders must understand, because everyone on social media these days are a little fake as well, you know. So I don't really enjoy.
I have seen some fake. You know, Telegram is a place where everyone's like, oh, I'm gonna get signals for this I'm gonna trade. I'm not saying that all of them are wrong or something, but trust your own analysis, trust your own instincts, and trust your own gut. It is not like everyone's gonna be right the whole time. You will see he will just send a signal, and after 5 minutes he's made 50 grand, but that can be a lie as well. I can just edit a picture. It's an easy thing. I'm not saying that everyone's wrong in this, that all of the signals can be correct as well, but I say trust your own analysis, trust your own gut, and that's when you become profitable, and that's when you have the satisfaction that you are a trader, not someone else. If you just follow someone else, you're just going to be following someone's footsteps. He makes a loss, you make a loss. He makes a win, you make a win. Then you're not a trader. Then you're just a follower of someone, and if you're making money, trying to make money as well. I would say just follow your own analysis, just follow your own gut. The thing is, if you lose money, it's on you. It's not on someone else. So that's going to train your mindset to take the losses, because trading is a thing where you want to take the losses as well. You should have the guts to take the losses, because no trader in this whole world can be profitable every single day of their life. They're going to make losses 100%. I have seen traders with 15 years of experience. He can own his losses. He will close, even if his stop loss is below, he will close it halfway, because he thinks that he's going to hit his stop loss and he's going to protect his capital. That's where I come in as well, because I protect my capital. If I've got 25k from Forex Prop Firm, I'm never going to lose more than 2% in a day. Never, ever. That's my maximum amount which I can lose in a day. That is rare case scenarios. My every trade is going to be 0.5% to win like 2%. That's how I trade, 1 to 4 trades. but
Okay.
it can be 1-1 as well, because right now the market's doing a little bit not acting as per me as well. So I'm just doing 1-1 trades. So I'm not going to count as a scalping, but yeah, I would take my losses quickly if I feel the market's going to go down, like today in the morning as well. When I was in the office trying to trade, I cut my losses really quick. I knew that the market's going to go down and I was buying. So, okay, I'm going to cut my losses. That is the one thing I didn't have before. I was like, okay, I'm going to stay in the trade. It's going to go up. It's going to go up. I was moving my stop losses below and below and below on my demo accounts. And then I thought, oh, I just lost $1,000. What if it was just a 25K account I had and I lost $1,000? So I've lost 4% for now. So I can't trade anymore because 5% is the limit. So that's how I trained myself as well, saying, okay, you can lose this much in a day and just take the trades that you think as per your strategy. You never have to stay in the market all the time. It doesn't matter. Just focus on your strategies. I know all of us traders want to look at the market and say, oh, I'm going to get in now because I thought, oh, it's going to go up. Oh, it went up. What if I got in? You're not missing out on anything. Market's going to give you 100,000 opportunities in a single day. Like I would say in 5 hours, it will give you 100,000 opportunities if you look for it as per your strategies. I'm not saying just trade anything in the middle of the market. For an example, the price is the middle of the market. That's where I don't take trades at all. If it's consolidating or anything, I would not trade at all. If it's at resistance, support or anything, I would make my strategies confidences. I would tick all the boxes in my strategies and then only I will take a trade. So when you do that, you've got confidence in your trade. So main thing is having confidence and being positive while in the trade. If you just take the trade in the middle, you thought that it was going to go up. Okay, it goes up, you make money. If it goes down, you lose money. That's gambling. So I say treat it like a strategy that you want to play and that you have decided good for yourself. I don't know what strategies you trade, but any strategies, just stick to it. And you don't have to make irrational decisions just to stay in the market all the time. You can wait. Market's going to go up or down or anywhere. Don't have the fear of missing out. That's what I say.
That's
so you're
so
confident
true.
in the trades as well.
Yeah. I think the confidence and the PMA, so the positive mental attitude while being in a trade is so important, because I think about it like this. When you're in a trade, you're always going to find something that is against your bias. You can always frame it the other way around. So let's say you're selling Euro USD, right? You can always make the argument that it's like in a buy program, So every time when you're not confident in your trade, you're going to find something, and maybe you're going to cut your trade off, and afterwards it just runs to your take profit. Every one of us had that happen. Yeah, so
100%. That's happened to me as well.
Yeah. So the confidence in yourself and in the trade is very important. And one big thing I'm always thinking about is that every moment in the market is unique, and every outcome of the trade doesn't really matter as long as you're looking out of 10 trades. What happens over the course of 10 trades? You need to stick to your risk management. And if you're doing this and you get like 2 to 3 R per one trade and you're risking like 0.5 or even 1%, over the long run, you can't really get into drawdown if you do it like this. But most of the people always switch their strategies, or they over leverage or stuff like that when they are not really focused on the mental side of trading, So
100%.
that's very important. And while I'm talking to you, you really understood that. And it really doesn't matter what strategies you're trading, as long as your mind and your mental game is on that level, is operating on a level, you're doing good. So you don't really need to do the best strategy with 90% accuracy. That stuff really doesn't matter. As long as your mind is profitable, the rest will follow as well. So
follow as well. Yeah. I was going to say this as well, that risk management, analysis, you say overview of the markets, back testing is the main important keys for trading. I would say, you can follow a strategy 100%. What you're trading, why you're taking a trade, then think of strategy. But before, you should just think about what your mindset is. If your mindset's not correct, I say just stay away from the computer, stay away from MetaTrader. Don't touch your phone at all. It's fine. You thought it's gonna go up, okay, it's gonna go up, but don't ruin your mindset over it, because if you're in a bad mood, or if there's some issues going on, you're gonna lose your money. That's what I had issues with it as well. So when I was on my challenge account, this live funded account I got, I was in a bad mood and I traded, which was against my rules. I say make your own rules and follow. We'll get to this later. But I lost money as well. Then I thought I was wrong because I broke my own rule by trading when my mindset was not correct. I only lost 1%, but I kept my phone away. I got my losses. Okay, because it doesn't matter. If you lost like 1% in a day, you don't have to make it back the same day. It's fine. The account is there. You can make tomorrow, you can make 4%. It's done. Then you're up 3% in 2 days. So when you average your money out, it's done. But you've already lost one and your mindset's not right, you're not going to win another one 100%. Because you can gamble and you can win money, but on your strategies and analysis, you're not making rational decisions. You're going to make different decisions which is not related to your strategy. I'm not saying that this is wrong. I have been a thing of it as well. I've been a part of it as well. I have made mistakes. I have done the same things. I have traded. My mindset was wrong. I've broke my rules, everything. But it always comes to learning. At the end, when you learn from your mistakes, you learn from your losses. The amount of losses, if I take, for an example, as I told you before, I just took a loss today. So if I take a loss today, I would go back to my loss and I will say, why did I lose? What did I go wrong in? Okay, this was my strategy. This is where I would have entered, but I entered quickly or late or what. But if it's your strategy, you got to trust it. It's done. It's done. It's done. Yeah, just be confident in that. That's what I say. Because trading is a thing where you want to be positive, not negative at all. Just try to get negativity away from you. You will start looking at growth in yourself as well. Once you're negative, once you're thinking about something, once you're thinking about your personal life, it's not. As we talked before, trading should be treated like a business. It was mentioned in the book as well. Business and personal is always different. So when you trade, it's a professional life that you transfer yourself into. You should pivot to your professional life. So that's what I think. You should not mix your personal and professional feelings. If it gets mixed, stay away from the market. You're not missing out of anything. You can trade tomorrow as well when everything gets sorted out. So I had a couple of my issues as well in the last week. I took a couple of trades when I was not in that issues. When it happened, when there was a personal issues that happened, I stopped trading. 7 days I was not trading at all. I started trading like 4 days before the week, like I think Tuesday, Wednesday or Thursday, I'm not sure. I started from there when all of my issues was resolved. And I see a growth in myself if I can stay away from trading. If you can take your losses, if you can avoid, if you can not sit in the front of the market, if you're not feeling the fear of missing out, and if you know you trust your strategies, you're growing as a trader. That's what I think are the check boxes which I would tick for myself going as a trader as well. Because I know that I've been funded now, and other traders would think, oh, he's just funded. But I would say funded account or challenge account is the same. Treat it as the same, and you will grow as a trader as well. Because once you think that it's just a challenge account, you're not going to make any money out of it. So it's not the right way to look at it. And also I would mention not getting emotional with your trades. I have seen new traders when they'll see themselves in losses and they'll be like, oh my God, I'm losing money. That's not the way you want to go. Okay, you're losing money, that's fine. Be positive. Don't get emotional, because if you get emotional, the next trade in your strategy that you can see on the same day, you won't be able to take it. You will be too scared to get in the market because you already lost like 0.5 to 1%. And then you'll be too scared to get in the market again because you're too emotional, and you will think, oh, what if it goes down? And if it goes up, and then you'll think, oh my God, I should have got in the market. So that hampers your mentality. Again, just stick to your things that you do and what you have written in the book, and do whatever you feel like if it ticks your boxes. If it doesn't tick even any one box, don't do it. It depends on whoever is what trading. For me, I would say personally, I will have like 4 boxes to tick out of 10. If 4 boxes gets ticked, for 4 boxes gets ticked, for an example, I would take the trade.
Mhm.
But the other boxes should not be as relevant for me to take the trade. But these 4 boxes should be the ones that I want to be ticked when I take the trade, if you know what I mean.
Yeah, of course, of course. You mentioned something very special to me, and that was you stopped trading for 7 days. That was something that I thought about, and myself, I were not able to do that a few years back, you know? Every time I was going to my MacBook, I opened it up, I opened TradingView, I saw it, and every time I saw an opportunity, you know? Every time I
Yeah,
thought that needs to be it, I need to take a trade and stuff like
take
that.
the trade.
But I think you're leveling up as a trader when you're sitting in front of your computer, you're watching the ticks go up and down, the candles printing, and you're just tape reading, you know? Just
Tape reading, yeah.
observing, but without taking action. And that was one big thing where it really clicked for me, because most of the time when I just opened up my computer and took any trade, it really wasn't high probability. But after I was just observing, like maybe 2 or 3 days afterwards, the trade was really high probability, like 3R in maybe 15 or 20 minutes, and it was
20
just
minutes.
perfect. But
Yeah.
if I would have traded the days prior to that, most of the time I would have taken a loss, and that loss would have put me in a little bit of a negative state. If I take a loss on Monday, I'm thinking about how can I recoup that loss? How can I make the money back to end the week green? But as I matured as a trader, I was reducing my frequency. So I'm most of the time only taking 2 trades per week. And at the weekend, I'm doing my analysis. And then
That's
I'm
really
going to limitate myself, like, let's say on Wednesday and Thursday. I know the economic calendar, and I know that I'm going to do my 2 shots there. If I win on Wednesday and it was my first trade, I'm done for the week. I'm not looking at charge, or if I look at charge, I'm just doing tape reading, you know? And that increased my profitability a lot, really a lot, because most of the times the negative performance only comes because you take trades that are not really high probability or in alignment with your trading plan. So you mentioned a really, really, really great point, and I want everyone to really understand that it's one of the highest levels you can reach to just observe the markets, but really don't take any action if you're recognizing yourself not being in the mental state to trade, because that's one of the most important things, to just be in the right mindset, in the right state to take a trade. And if you notice yourself not being in that state, it's totally fine to say, okay, I recognize I'm not in that state, and therefore I'm not going to trade. As easy as it gets, because
as it is.
In my opinion, it sounds a little bit more easier than it is really. And it took years for me to really understand that. But once I understood that point, my profitability was going up, and it was just amazing for me.
Yeah, I say as well, because this is a good advice for me as well in this little conversation that we're having of stopping your trades in a week as well. That's a good input that I would take in my book as well, saying that, okay, I've made the thing for my week, I'll move away from the market, and that's done. I'm not saying that I've made too much losses of it, but I would say, I would move away from the market, because I know that I'm going to make money on fundamentals anyways, because there's easy probability trades, like high probability trades that I can find when there's news or something's coming out. Because as I said, I'm a finance geek and I like to analyze fundamentals. So when I say fundamentals, I have got news terminals and everything, which I would do my whole analysis on. If the news coming at 1 o'clock UK, I would say that I would spend my whole morning just looking for that one trade that I want to take while the news hit, or before the news hits, or after the news hits. So I would say focus, all of the new traders as well, focus on fundamentals as well, as long as you can see back testing. That backtesting is the key for me as well.
Mhm.
I have backtested all of the news. I have lost in backtesting as well, but now I know how to read fundamentals. Now I know if the market's going to go up or down. I know it's not 100% sure, but I would say just analyze it in a way where you feel that you're 100% confident that you're going to win the trade. If you analyze the whole world data with the GDP and everything of the US, because I trade gold US and pound US majorly, I would say like study a country's data that you can, and when the news comes out, you can say that okay, the market's going to go this way or this way, but you should have a strategy on it as well, not just taking the trade just like that. You should also follow technicals on it. If it's a support, if it breaks the support, then you take the trade. If you don't feel confident when there is fundamentals going bearish or bullish, just wait for it. There can be a retracement after that as well, because we see before 2 weeks, I sold gold. It was, I think, before NFP. It was a Thursday. I think it was jobless claims. I knew it was going to sell off, but there's going to be a retracement as well. So that's how I won 2 trades in 5 minutes. I sold. I got out of the market. I knew that there was going to be retracement. I got in on a buy because I knew that the fundamentals was bullish for the dollar, but it was a manipulation on the sell side because of the country's GDP. It was going down. That is a little bit of in-depth analysis that I can give on the fundamental research that I did, but it's a nice way to look at the market as well on fundamentals, because that is a different perspective that I'm giving about from technicals, because I follow technicals as well, but fundamentals is a thing that you want to look at as well. News always drives the market structure. That's what I believe, because news can give a market structure as well. If you're not trading news, but you should know if news comes out, if it breaks out of the support that you've marked, you want to take a buy or you want to take a sell, that's on you. But follow the news. If the news is really, really, really bullish for the dollar, gold's going to go down. So if gold's going to go down, you should know that the dollar's gone up. Now there is no way of dollar for at least for some time until anything else comes out. It's going to go down and go up. So you can short your trades and everything. That's just a trade idea that I can give of reading the fundamentals and the news. Because even if you're following technicals, I would always confluence. There's one of my tech box check if there is any news and what is the things about the news that can come out. It's because I follow a guy, I don't know if I can mention his name, but I follow a guy who is really core fundamental guy as well, from whom I've learned how to analyze fundamentals, markets and everything. So I say always not depend on fundamentals, but use it as a confluence if the market's going to go up or down, or if you're right or wrong. If you think that as per the technicals the market's going to go up, but the fundamentals say it's a sell, stay out of the market. That's what I do. But if you think that both in the same bullish trend, you can take the trade. That's your confirmation. Okay, look for your strategy now and you can take the trade. That's what I think. So the first thing is fundamentals and technical should match together, and then you can take a trade. That's what I think. Because some traders think that, oh my God, I got just stopped out. Because I think like last week, there was Canadian news that came out. Well, gold went really bullish out of nowhere, which was not even related to the dollar. It went really bullish. And people got stopped out on that. And people thought that it's nothing. But it's the fundamentals and technicals playing together. That's what I thought.
Really nice, really nice. Okay, so now we are going to go over your trading approach and style. We talked a little bit about fundamentals and stuff like that. Now I'm going to ask you, what is your trading style? What is your approach? Is it like day trading, swing trading, or even like scalping?
So I would say day trading. I have pivoted to all of the things except swing trading. Swing trading is a trade thing that I don't trust taking it. I know that it's a good thing that you can look on higher time frames, but I have pivoted from scalping and day trading. But scalping is a thing which I wouldn't want to take, because there is less low probability trades that I can find on scalping as well, because I can't trust my trades if I take a scalp. So in my mindset, I've pivoted to a day trading. So that's when we mentioned, like we was talking about before, saying that why would I wait for an entry which I want to take with the confluences that I think and all the boxes are ticked? I would go for a day trading. for at least 1-3 or 1-4 trade. But
Mhm.
these days, as I mentioned before as well, I'm going for 1-1 trades because the markets, as per me, is consolidating and moving variously vaguely as well. I have hit my TPs in 4 seconds. I have hit my TPs in 4 hours as well in these days. So I have been targeting 1-1 trades these days. So I can be satisfied with my amount that I'm making. For an example, if I take 1-1%, I'm making $250. I will be satisfied with it if I'm looking for a 1-1 trade on a day trade. I
Yeah.
would not go for a scalping, which is only $100, in which I can risk 200 and make 100. This is not my strategy because with me, I've seen myself in scalping. Sometimes I lose more money than I win. So it's not about win rate. It's just about the thing that I win because I'm losing 200 and I'm making only 120, 130 for me with scalping. But with day trading, it's been more profitable. I'm okay with losing 0.5%, but I get a chance to win 2%, which is a trade. I would be confirmed that I'm going to win that much. That's the thing. And after a while, I think all of the traders do that, move their stop loss to break even. So that's the best thing I can see in day trading, like as well. Because scalping, you can't move your stop loss to break even. You can't stop it because if you're in $100 profit, you're gonna think, okay, let it go up a little bit more. If it's a scalp, I'm gonna close it, and it hits your stop loss as quick and it goes up. Because with scalping, I can't keep too much of my risk management. Doesn't allow me to do scalping as per my mindset because my trade is kind of different because I will get stopped out too quick and I will lose money. So I like to keep my stop losses tight with my proper risk management and do a day trade in the day. I would not say that I'm a scalper or a swing trader. I'm a day trader 100%.
Okay. And do you watch specific sessions of the day, like London or maybe New York if you're trading gold?
Yeah. So I would say mainly my trading time, what my rule book says, is from 10 o'clock. So I know 8 o'clock London starts, but 10 o'clock I will get up. I will do a proper analysis on the markets. Like 9:30 I will get up, do my proper analysis of the markets. 10 o'clock I will be ready to look at the markets real time and trade. But firstly, I would say, what's the trend of the market? I want to sell or I want to buy. What's the higher time frame say? What's the top-down analysis on the chart on gold or anything? For what about my timings? I would say from 10 o'clock to 2 o'clock, 3 o'clock, up tops, 4 o'clock. I would say if I can find a trade, but not every day. As we talked before, I would stay away from the market if the market's acting weird. I would just leave the market to it and then look for the next day's trade. But my trading times would be 10 o'clock to 2 o'clock majorly before New York because I can find more high probability trades in London session rather than New York. Or if I've never took a trade, if I'm looking for taking the trade in New York, this is a trick from a mentor's book. I would not take a trade after 1 o'clock or 1:30 because I know New York's about to be open and I don't want to be a part of the liquidity takeout. So I would just wait and I would see how the market's acting. When the market cools down, when it's around 2:30, 3 o'clock, I know 2:30 is proper New York start. 3 o'clock, I see market cooling down, pre-New York's done, New York session's done, everyone has the money in the market, or some people taking money out of the market. Then I'll look for an entry of the retracement or the trade I can take as per my strategies. If not, I'm not going to take a trade. I will just shut down my laptop and I'll go. 9 times out of 10, I don't think I take a trade after 3 o'clock as well. I would just sit in front of the markets and look the candles printing, but I would see if my strategy is working. If it's not, I would just stay away from the market. It's done. Next day, new opportunity that the market will give me. Because with me, when I was backtesting as well, I have seen Asian sessions as well. It's only once I've traded Asian session, which is not in my rule book, but it was a really nice trade that I wanted to take, and I was fixated that I'm 100% going to win this trade. And I won that trade. I made 4% on that trade, and then I slept. But Asian session, I don't think is good for me as well, because I don't trade at all. I will just analyze the market in Asian to see if I can trade in Asian, but I've never seen myself doing high probability wins in Asian. So I would say that Asian, I would stay away, and New York and London, I would majorly London, I would focus on, because I trade pound and USD as well. And I can see there's a more probability trades in London session on pound pairs, if you know what I mean, in pound
Yeah.
and Japanese yen or pound and dollar is a good probability trade for me. Also gold sometimes, like today, it was a nice opportunity for a buy to take on gold as well when the New York Open, when London Open, sorry. So I can say that sometimes on gold as well, it's a nice opportunity to trade London session as well.
Okay, okay. Yeah, I think London and like the New York crossover is the perfect timing for you if you live in the UK,
Yeah,
you know?
UK,
So
yeah.
I think it really doesn't make sense to trade like Asia and to stay up all night. Here in Europe are really blessed to be able to trade London and New York around normal times. And
Normal
sometimes
times.
I think about people living in America who need to get up like in the middle of the night to be able to trade London.
Trade
So
London. Yeah.
I think in Europe it's really good because you can trade both of them, you know. So the
Both
most
of them.
important sessions. Yeah.
Yeah, that is way better. And also, I would like to mention about Asian sessions. I have seen weird spikes that you don't want to see when you're trading as well. Even if it's in
Yeah.
your favor, you don't get the confidence because you know that there will be a retracement really quick and the market can push the other way. So that as well, I would just like to mention that that's one of the major reasons I wouldn't want to trade Asian. I would just stick to New York and London, majorly London again.
Yeah. Okay. Awesome. Okay. So now, can you describe your trading plan or your trading strategy and the key principles or indicators you rely on? So we touched briefly on like fundamentals and stuff like that, but just go a little bit in depth if you want to add something.
Yeah, so as I've mentioned, I've trading for a couple of months on Forex market. I've tried various indicators. I've researched the whole trading view indicators. I think almost I've tried majorly mentioned everything. But the one thing is, I would say, is trendline breaks. That works for me as well on higher time frames for a major confluence that I can use to tick a box in my trading strategy. I don't use one thing as my strategy is that, okay, this is my strategy. The fundamentals line up, technicals line up, my trend line breaks line up, my breakouts line up, support, resistance, all of them line up. I take a trade I don't take a trade. So I use too many confluences. I know that it reduces the amount of trades you take, but it makes you a profitable trader rather than taking just one confirmation and you take the trade. So I would say majorly, I have seen myself analyzing the markets with trendline breaks. That's the indicator if we talk about. Trendline breaks helps you analyze the trend of the market. Because I would say higher time frame, 4-hour breaks, 9 times out of 10, the market's going to go down. I'm not saying there's a 90% win rate because then you have to keep your stop loss too big. But as per your risk management, if you feel that it's a good trade to take, as per the confirmation, trendline breaks has helped me make a decision if I wanted to take a trade or not, and give me a confirmation on that. Because sometimes you have got contradictory opinions on yourself if I should take the trade or not. So that's when I use many of my confirmations. If it's a high probability or not, I would say if I would take the trade, if it's above 70% probability to win the trade, or I would not take the trade. Even if it's 50-50, I would not take a trade. I would be like, okay, it's fine. I can tick more boxes later and get a good trade in. So indicators, trendline breaks, 100%. I would follow that and not blindly trust it. Do your own analysis on it as well. But it gives you the trend of the market again. If you want to buy or sell, when you open the market, you see the market's gone all the way down in Asian session. When you open in London, 9 times out of 10 traders think, oh, there's going to be a retracement, I'm going to buy. But if the 4 hours broke, or hourly's broke, or the daily's broke, like majorly weekly's broke, you would not want to take a buy. You want to look at the market for a while and then decide what you want to do. That's what I do because I can have that easy confirmation in the morning to wait and not take an impulsive decision. That's when I think that I would use that indicator majorly to use my confidence in the trade.
Okay. Yeah. Sounds good. Okay. Now let's move on from your trading approach to how do you manage risk and talk a little bit about psychology. So how do you personally approach your risk management And what techniques do you use to mitigate risk?
Okay. So with me, I know that there's a lot of websites that you can calculate your risk on. Just enter your account balance and XYZ. But I used to do that, but now I can calculate easily how to take the trade. So for an example, I will just give you a real graph example. If there is a resistance in the bottom and I've got all of my confirmations I want to take the trade, I would just want to risk 0.5%. But with me, the thing is, I like to keep a tight stop loss on. So I would have more lots than having less lots and a bigger stop loss, because I know my mindset, 9 times out of 10, if it's going to touch my stop, it's going to go. And I'm willing to risk 0.5%. I'm good with it. At times, 0.6%. I'm good with it. So what I would do is, if I'm trading gold, I know that it's got my confirmation, it's gone up. Now I want to take a buy. It's breakout of support, my everything resistance confirmation and everything. I would take the buy. I would place 1.5 lots, and I would keep 8 pip stop, so which amounts to like 0.5%. So then I would trade like that. Okay, then my mindset would say, if it breaks below this, my stop loss gone, it's gonna go lower. And I have seen with my trades, and I would say 8 out of 10, the trade's gone lower. So I'm good with losing that 5%, but I can have a bigger win rate when my trades goes in profit as well. So that's why I was talking 1-to-1 plays in this as well. I can make 1% easily if I'm willing to lose 1%. For an example, at times I would lose 1%, but I can make 1% quick because of the way of the market, that the market's a little bit slower and consolidating. But if I want to make money in that market, I would not trade if the market's consolidating at all. But if I want to do it for a scalp or something, I would do that. But as I said before, the scalping has not been good for me. So I'm not scalping at all. I would be a day trader and I would take the trades which is high probability with all the confluences and use my risk management with more lots on. Sorry for that. I know that most of the traders don't risk like 1.5 lots. If they're trading gold, they would just do 0.8, 1. But with me, it's 1.5, and I would keep a tight stop loss. That's how I trade, my personal perspective on this.
So your stop loss is like an invalidation point for you as well. So you know if your stop loss is going to get hit, the market is most likely to turn as well.
So even if I'm in profit, I would not move my stop to break even quick, because in my mind, if I take a trade, I am good with losing 0.5%. That's the thing I've got fixated in my mind. Okay, I can lose 0.5%. Only if the market's consolidating and I think that the market's going to go down, I will cut my losses. I would lose like $60 and I'll be done. But 9 times out of 10, I'll keep my trade open, goes up 2%, then I'll move it to break even. And then I'll see if it has more potential going up or if it is going to consolidate. So that's when it happened with a GU trade I took 2 weeks before. I would say I was up 2%, more than 2%, I think. But I was thinking that it's going to go up. But with risk management, I say I would move my stops on 1 minute breaks. So 1 minute, 1 minute, 1 minute, I'll move it. So I know I hit my stop, but I still made $400 on it, because I knew I was up like 560. I made still 400. I would say that's the way I go if there's potential in the trade. But as soon as I hit my stop, there was a big candle down. I would have hit my initial stop and I would have just made like 1% or break even, I would say. So that's where I really play in to keep my stops where I wanted to. When I know the market can act weird or go the other way around, I would keep my stops there, because 8 times out of 10, the market will go down after my stop or go up wherever's my entry, I would say. So that's how I train my mindset on risk management, of putting 1.5 lots on and getting a good trade out of the amount I've risked, basically.
Great. Sounds really good. Okay. Now a really important question. How do you manage emotions and maintain discipline during both winning trades and losing trades?
So I would talk about losings first, because I think most of the traders, including me, have faced that thing, getting emotional. So I would say getting over your emotions is confidence. Single word is confidence. That's what we talked about. Trust in your trade, confidence. You have confidence. I know that you've took the trade. You are going to win it. If you hit your stop, it's not a big deal. It's part of the business that you're going to lose your money and then you'll make it back. Because you just lost like 0.5%. Okay, you're going to make it back. That's not a big deal. But you don't have to make it right now. If you get emotional, you're going to take another trade in a single second. That's not the way to go with. Look for another trade. Look for a nice strategy. You're going to make 3% out of it. Your 0.5 is long gone. You don't even think about it because you've already won it. So I would say mainly confidence and trust in your trade that you take. I was one of the persons that initially, in my initial days when I started, I would take a trade, I would see drawdown. I would not like to see drawdown. I would be like, no, I should be in profit all the time, like all of the traders. But as soon as trading humbled me, it made me mature within trading. I would say I am good with taking losses as well because I can learn where I went wrong. So I think you have to see the bigger picture here. If you're losing, why are you losing? You are going to learn from your mistakes. You're not going to make that mistake again because it has already overcame you from that mistake. So I would say stick to your plan, stick to your trading, stick to your strategy, stick to your, just be confident, just have trust in what you're doing. And you're going to make money and you're going to overcome your emotions. You don't have to think, oh my God, I've just got this much, all of that. You're going to double think, and then that's when you start to go down as a trader as well. Because your mental health's gone, you're not making money because you're dependent on your trading too much.
Yeah.
I would say I heard one thing in a podcast. That was a guy, he said, whatever, I'm into trading now. He started being profitable with one thing. He thought, if this helps anyone, he thought that if I make losses in trades or if I lose a lot of money, I can go back to my old life and still come back to trading. I am never gonna get out of trading, but I can go back to my old life. I'm not scared of it. So once one of the people, like all the men or women or anyone who is too much dependent on trading, their house is dependent on trading and everything, I would say it's just a setback in the business. You'll get in. That's the thing. So the emotions, it will get lower and lower and lower when you see drawdown. Okay, I'm going to get in back and I'm going to win it. But I'm going to look for good trades and I'm going to make it back. That's why I talk to myself about this. Then it got easier for me as well. And now I don't mind losing 0.5, as I said, or 1%. Would I have fixated in my mind, okay, I'm willing to lose this. That's fine. Even if I lose it, I'm going to learn from my mistakes and they're just going to help me overcome my emotions as well. That's why I say.
Awesome. I think it's so important to get something like this in place, so something we already talked about the positive mental attitude, but you need to have something in the back of your mind that really, how should I say it, that really allows you to relieve the stress of yourself that you put yourself in. So great. It's really good. Thank you for the recommendation.
No problem. And also about winning trades, I was going to say, winning trades should not make you overconfident. Only confidence up to a point where you can handle your mental health. Yeah. If you're overconfident on your trades, you're going to take another trade and trades are going to lose it. Because there is a thing with trading. You win big, you lose big. Because if you win big, you're like, oh, I've got loads of money to lose today. I don't mind. I can lose 2% now. I've just made 4%. I'm going to lose 2% now. I'm good. Well, when you made 4%, you did a great job. Stop trading. That's what I would say. If you get overconfident in your trades and you're just going to keep trading in the day, you're not going to be profitable because you're going to lose money as well. Because trading is a thing, it's going to give you opportunities because you're going to look for it. But at the same time, you need to use all of your rules that are in your book, that you have wrote in your book, to follow. Because I have been there myself. I've made a lot of money and then I've traded and lost like 2%. And then I was like, oh my God, it's not how I do it. I was up 4% and I'm just up 2% now. I don't want to trade now. I will just let it be and then I'll come back to the markets later. I would say that because I got overconfident. I have learned that in myself. I don't know if other traders get overconfident as well. But some or the other way, you think that you're going to trade more and you're going to make more money. And one day you're going to pass your account, or you're going to get a payout, or you're going to get something. Payouts is a process which can take time. That's fine. Just stick to it. That's not a big deal. You're going to get your payout. Don't think if you get funded as well that you want to get your payout. I've seen many people who get funded and lose the account the same day.
Yeah.
So I would say don't keep your goal on the payout. Just keep your goal on being consistent, because consistency is the key in trading, I would say. If you set yourself a goal in a day, you make X amount of money. That's your goal. That's your personal goal. X amount of money. You stop trading if you're trading every day. But if you're trading like one of us, for an example, you're not trading every day. You're just looking for good trades. I would say just keep your goal in a week. You make 4% in a week. You should stop trading for the week. You get back next week and you'll find more trades. Trust me. I have been there and I have done that. That's what I would say. That, not be overconfident and just stay away from markets when you already won.
Yeah, great. And you made a really good point with that you don't need to focus on the numbers, but focus on the outcome and I should say it this way. When I've done my goals for this year, I really focused on not really the numbers, like not really talking about like, let's do 5 or 6 figures this year. I really switched over to thinking about becoming consistent, doing what I'm doing now, So I am 100%. Focusing more on trading less, but perfecting my craft. So when you when you don't put the stress on yourself and on the numbers, the rest will come automatically when you focus on the outcome and the process you're going through.
Yeah. It's just about the process, and it's just about the consistency that makes you a good trader as well. In short, if I say that, I think you would agree on this as well, because you've been trading for a lot of time as well. The consistency is the thing that makes you profitable. That in one word, if I say trading, consistency, profitable, that's the three things that should line up, which will grow you as well. In short.
That the thing is, what I really didn't understand a few years back is that the consistency you're having in your real life besides trading really circles back to your trading, I heard the quote, how you do anything is how you do everything. And I really didn't understand it at first. But after that, I was thinking about it. And now it made really sense to me, because everything is connected. So what you do in your personal life, it's like, for me, it's really important to go to the gym, to eat healthy, to meditate, to do stuff like that, to get better every day, to read every single day. And all of that circles back to me and to my trading, So my performance really went up after I focused on everything I did besides trading. Because if you're too focused on just chart and analysis and stuff like that, you really won't get profitable. But if you leave it alone and focus on your journey and on the other things outside of trading, your performance really will improve. That's
100%,
really important.
100%. I would say that your performance should improve if you're doing the other things right. If everything, whatever do, like, for an example, I would love to just go to the gym. I would go to the gym, I would stick to it, because it makes me in a positive mindset.
Yeah.
That's what I think. It can be X or Y, anything. If it makes you in a positive mindset, you can do that, and it will get your trading really, really profitable and nice. And you know that this seems wrong, but some people who have already done this know that this is a way to get profitable in the thing as well. Because it's not only looking at the charts all the time. That was a great point that you mentioned as well, I would say.
Okay, so the last question I always ask is, what advice would you give aspiring traders who are just starting out?
So I would say, again, to back off our conversations, I would say just focus on your growth, focus on your mindset, and don't just look at flashy people all the time. Focus on your growth. I think you got to be a little bit selfish in this, saying that look at yourself, how you grow as a person and as a trader, which can make you profitable. I think if you have a great mindset, you have a great trade. You are going to be a great trader. But if you're always feared of entering the markets, you're always feared of trading, or if you're feared of X or Y thing, you're not going to make a good trader. I would say just learn, read books, listen to people who really have the knowledge in what they're saying, and you can be implementing that in your own life. And the major thing I would say, make a rule book. Write it 10 times. If you've got 5 rules, right? 5 rules 10 times, or however you want to make it trigger in your brain, like stuck in your brain, and never break that rules. Because if you break that rules, think that you're going to make a loss, or you're going to ruin your mindset, or you're going to ruin your trades for the couple of days or a week or something. I would say follow the rules, stick to your strategies, stick to whatever you're doing it correct. Don't take advice from people who are really negative and say trading is gambling. That is the worst advice, and the worst people that judge trading is gambling, I would say. Ignore that people, ignore all the negativity in your personal and professional life. Just focus on what you're doing. You're correct always. If you're trading, you're correct. But just learn the right way to do it and just focus on it. That's what I would say. Yeah.
Great points. Really, really, really great. Thank you so much.
Thanks.
Is there anything you want to add? Or
I think I've said too much. I've talked too much. I'm so sorry for it to eat your brain, but I would say that's all for me.
Yeah, perfect. I think that was perfectly fine. Okay, so thank you so much, Ronak, for sharing your valuable insights and experiences with us today. Your journey and expertise have truly been enlightening. And to our viewers, if you found this interview helpful and informative, be sure to check out more content like this on the forexpropelled.com YouTube channel. Don't forget to give this video a thumbs up and leave a comment below with your thoughts and any question if you may have any. We love to hear from you. Once again, thank you, Ronak, and thank you to all of our viewers for tuning in. Remember to subscribe to our channel and hit the notification bell to stay updated on all our latest interviews and trading insights. Until next time, happy trading.